then. Let's go live here. All right, we are live, and there's a bit of a delay, so if you see something in the chat, people sometimes ask questions after things have been answered, but that's just because of the delay. But yeah, well, awesome. What's the weather like over there?
Well, the weather is fantastic. We've had some amazing days, but it has not been that hot. I mean, temperature-wise, it's been I'd say it's in the high 70s, which is really a little bit cool for Portugal, but it's been, but other places in Spain and in Canada, I guess, are having massive heat waves.
Yep.
So I'm quite glad to be here.
Yep. My buddies up in British Columbia, and they set the record for the hottest temperature in Canada, and then the next day they broke it, and then the day after that they broke that other one. Of course.
I like hot, but not that hot. You know what I mean?
Yeah, it's 120 or something up there, which is crazy. I mean, we're out here in Denver, so it's a little less. The altitude helps. It doesn't get. I mean, it gets hot, but it's not like a humid hot. But up there near the ocean, man, no thanks. But
yeah, when I lived in Southern California, I remember one day it got up to like 116, but it was dry. It wasn't like you didn't even sweat because it evaporated so fast. You'd go to the get a drink at the 7-Eleven that they have there, and you get like a 64-ounce drink, and you drink the whole thing. I could never drink that. You'd put it away because you'd sweat it out within an hour. It's amazing.
Ooh. Yeah, I mean, obviously, I grew up north where it was cold, so I'm used to like cold winters and not a ton of sunlight, and the heat gets me. The heat gets me for sure. But okay, so looks like it's 1 here, so I'm gonna just go ahead and get started with the introductions. Probably we're gonna shoot for an hour. If we go a little bit over with the questions, that's not a big deal, but that'll be the plan. And we've got Chill and I have some questions for Clinton, and then if you're watching in the chat, please type your questions in the chat. We'll make a good effort and make sure those get answered as well. With the tax stuff, there's so much to cover, and I'm pretty sure we're primarily focusing on U.S. citizens' taxes, right? We're not getting into like international.
Just U.S. citizens, yeah.
Right. So yeah, if you got questions about taxes for somebody in the United States, this is your stream. Okay, yeah. So introductions. I'm Matt. I'm joined by my co-founder, Chill. We run 2 groups: the Open Economy Initiative, which is kind of the nonprofit community side of things, and then we have Will and Reimer Consulting, where we do one-on-one consulting for really anything crypto focused. So from mining to startups to incubators to just individual investments. And portfolio management, all that good stuff. We've got plenty of expertise. We've been doing this for about 4 years each, and yeah, would love to help you out. If you need some consulting stuff, just reach out to us, matt@willandreimer.com or cbrimer@willandreimer.com. We'll put it in the chat there. But yeah, appreciate everybody joining us. Looks like we almost got 30 people so far. I'm sure a few more will trickle in, even though it's like 1 o'clock in the afternoon here. But yeah, I don't know. Chill, do you have anything else? Did I miss anything?
Nope, just go ahead.
Awesome. Well, yeah. So today we are joined by Clinton Donnelly. I hope I said that right.
Yep.
And yeah, so you've got a tax firm, and you've got some pretty interesting products, and you've got some pretty interesting stances on how crypto taxes work that I haven't heard before. So I'm really excited to hear more about that. But yeah, if you don't mind introducing yourself a little bit so everybody knows who you are and what you're doing.
Well, thank you, Matt. Chill. My name is Clinton Donnelly, and I have a tax firm, Donnelly Tax Law, and we also offer a service called Tax Audit.com, and we'll touch more on that later. I have an advanced law degree in international financial regulations, and I also am an enrolled agent, certified by the IRS to represent taxpayers worldwide, and that's exactly what I do. I have clients in 62 different countries. These are U.S. taxpayers. Most of them are cryptocurrency traders as well. So my practice, I started practicing about 8 years ago, and from the very onset, I had one of my clients happened to be a crypto trader, but he never told me. And then he made a killing in 2017. 2018, he opened up and said, I got to report my taxes. Turned out, he had to pay $6 million in taxes. He'd made 16 million in gains, and his attitude was, I pay him because if I don't pay him, I know the IRS will find me. And we're starting to see that come true, really, with the John Doe summonses from the IRS and whatnot. So anyhow, over time, the crypto has really dominated my entire practice. In 2018, I worked with a firm called Crypto Tax Prep, which was like a pioneer in this space. They didn't last very long because they didn't understand the market well enough, but I became their tax law advisor and was leading them on how to interpret and apply the tax laws to cryptocurrencies. But my own practice took off very significantly at that time. And since then, I've spoken on Ivan.tech and MM Crypto and Brad Kimes, the Digital Perspective Show, been at a number of places, quoted with, Yahoo Finance. And I think I bring a real refreshing view to crypto taxes. And I look at it from a legal point of view, from my law degree, because the laws about cryptocurrency you have to apply laws that are written oftentimes in terms of stocks or bonds or general finance, and you have to read through the lines of how do I apply this to cryptocurrency. And it's difficult. For not all tax professionals are comfortable doing that. They would rather follow a book, enter the data off some 1099 form, and just move on to the next tax return. But at our company, we take time and we do a thorough job. We've developed a methodology that we call a bulletproof crypto tax methodology, where we prepare a tax return with the extra forms that you wished you had put in there if you knew in advance that you're going to get audited by the IRS. And we also defend people in audits. Right now I have 20 people we're representing before audits at the IRS, and I have a unique perspective. All these audits are cryptocurrency related audits. So I think that's given me a unique, perhaps the best perspective at all at seeing what the IRS is doing, how they're struggling, what they're trying to do to get crypto people to fork over their money.
You're on the front lines, man. You're seeing the stuff that's coming down kind of like as it comes down, whereas the rest of us, if we don't get an audit or we're not part of a community where there's people, potentially getting audited, I don't find out about it until there's an article on it or somebody I've heard, talked to. It's like, oh my gosh, they're doing this new thing. So you got the cutting edge info, it sounds like.
Well, we do. We have a company of 18 employees, and we're working both the audit and the crypto side. And we have a lot of, I think we have a significant voice, and I've been able to win in a lot of areas. So that's a little bit about me, and fire away.
Cool. Well, yeah, I think I want to start with talking about people, because I have quite a few in our community who got into crypto 2014 or 2015, kind of before the bull run, basically in 2017. And back then, the main position on crypto taxes was like, I don't have to pay them. It seems it's a lot of people that I've run into are like, oh, you know what, like they didn't consider it an asset or a commodity or whatever different government organization has it classified as, but people were just not paying it. So like, is there any advice, because I know there's quite a few people in this position, but is there any advice for somebody who had maybe significant crypto gains in 2016, 2017, purchased back in 2014, 2015, and hasn't done anything tax wise? What would you say to them?
Well, this is a big concern. the IRS has what's called a John Doe summons to Kraken and Poloniex to obtain information about U.S. taxpayers that had over $20,000 of trading activity, starting in 2016 and going through 2020. Coinbase has previously turned over this information, but now they're actually going after Kraken and Poloniex. I find it a little bit offensive that the IRS could not come up with intelligent 1099 forms since, I mean, they knew about cryptocurrencies back in 2014. They have not come up with an intelligent way to report, and they simply resorted to lawsuits to use the courts to obtain data. And this particular, what's a little bit unnerving about these two lawsuits is they're going after old data. There is a statute of limitations. It's a law, it's a taxpayer protection. It's 3 years. After you file, after 3 years, the IRS, cannot audit your tax return, and you can't amend it either. So your 2017 tax return that you filed, say in April of 2018, it's already been 3 years. This is the year, it's 3 years. You can't amend it. But now the IRS is going back and they're going after big traders for 2017, mainly 17 they're going after. And what's disturbing about this is that if they can assert that you underreported your income by 25%, which is if you didn't report crypto gains, this is probably going to happen to you, then they can extend the statute of limitations on your tax return for 6 years. You still, however, cannot amend it. All right. So they've got people in a bind. All right. And there's a lot of big traders. I've had a lot of people calling me up saying, look, I want to amend my tax return. And I said, we got to go real quick because, especially if they did an extension, they might still be able to amend it. But this is a very explosive topic. And I have a very strong position about like-kind exchange. I love to discuss it further with you. That's how we attack this problem.
Got it. Well, then, I mean, yeah, that's kind of a natural segue then, I think. So yeah, Chill, I think you showed me something on Twitter about a Forbes article.
Yes.
Hold it up real quick, or yeah, do you want to just summarize it for us?
Yeah. So IRS is not currently honoring the like-kind exchanges tax law that they apply in the real estate industry when it comes to cryptocurrency. And they published an article, so I kind of wanted to clarify that because Clinton would know more about it.
Very good. So first of all, what is like-kind exchange? And then let's talk about what the IRS came out with, and then the Forbes article. And I think that'll lead us to a lot of exciting discussion. Now, like-kind exchange, in a nutshell, is basically the way people thought they were taxed back in 2017, like you were describing, Matt. If I trade from one crypto to another crypto to another crypto, that I'm not taxed until I cash out. And that's kind of, go to fiat. And that's how people, crypto traders, thought they were being taxed. And in fact, like-kind exchange permitted that. There was a massive tax law change at the end of 2017, and the like-kind exchange rule, Section 1031 of the tax code, which has been around for about 90 years, instead of referring to all property, it was limited strictly to real estate going forward. So you can't do it in 18 going forward, but prior to that year, you could claim like-kind exchange. Now, in 2018 and 2019, we were all quite abuzz. It's like, can I still do like-kind exchange? Could the IRS give us guidance? Their lips were sealed. They never talked about it. There was in November of 2019 at an AICPA, which is the American Institute of CPAs convention, they had lawyers from the IRS counsel's office, and they, on one hand, at first they said, no, you can't do like-kind exchange. And then they got corrected by the IRS counsel's office and said, yes, we'll take it on a case-by-case basis. So they backed off even then. They wavered. Now, they came out with what's called a private letter ruling. Now, the IRS says a lot of different things. Some things they say are regulations, and that's of the highest, after the law, regulations. And then there's rulings and procedures, and pretty far down the line, you have a thing called a private letter ruling. A private letter ruling is when someone writes to the IRS counsel's office and says, is it okay if I do this? And they respond to that with what they call a private ruling. Now, this cannot be applied to any other cases, but it gives us a glimpse at what the IRS counsel's office is thinking. They just came out with one on June 8th. They came out with on June 8th after the 3-year statute of limitations had kicked in for 2017, where this ruling would only apply to things in 2017 and before. So I find that of questionable action, just right, the whole timing aspect of it. Secondly, now this article basically says this. The question was, is it of like kind exchange if I trade Bitcoin for Litecoin, Ethereum for Litecoin, or Bitcoin for Ethereum? And it's about a 2-page article. It's double space. It's pretty simple. And the IRS counsel basically said this: Bitcoin and Ethereum. Well, let's see, how can I phrase this? Let's ask ourselves first, what does it mean to be of like kind? Like, if something's of like kind, then the cost basis of the first item is transferred. It becomes the cost basis of the second item. So I could, this is very popular in real estate right now, of course, and it was before. I could have an apartment, I could sell that apartment, and I could buy another apartment. Instead of recognizing a gain, I can transfer the cost basis of the first apartment over to the second apartment. The second apartment might be more expensive. So now when I sell the second apartment, the gain is actually the total gain of both apartments together. Does that make sense? Okay. All right. So I'm kind of like pushing the ball down the road, but I'm also taking advantage of getting something from short-term to long-term gains, which is a lower tax rate. So what constitutes like gain is not, it doesn't have to be identical. The tax law says like, and like is like in nature and character. That's what the regulations say. It has to be the same in nature and character, not quality or grade. All right. So the new apartment does not have to be the same nature. It doesn't have to be a 2-bedroom, 2-bath. I mean, it could be, it could be a luxury apartment. All right. It could be an entire apartment building. All right. So it doesn't have to, but so nature and character, that's what that is. But quality is not the same issue. Now, having done that quick summary of like kind exchange, we come back to what the IRS counsel said. They said Bitcoin and Ethereum are different than Litecoin because Bitcoin and Ethereum were on and off ramps for fiat. And then people would buy Bitcoin and Ethereum, and then they would use those to trade and buy other coins, right? We know that happened, right? And they're saying because of that, they're not like kind. All right. Then they go on to say that Bitcoin is not of like kind with Ethereum because the point they say because Ethereum has smart contracts. Therefore, now if based on that assessment, you would have to say that there was no like kind possible for any sort of cryptocurrency, okay? Because any other coin was a lesser coin. The article on Forbes came out and said, well, yeah, the IRS counsel said this, so if you filed like kind exchange, you better be thinking second thoughts, right? Now, the author of the article on Forbes magazine is also the president of cointracker.io, which does not support like kind exchange calculations in their software. So I think there's a bit self-serving his comments there. But I've already written a legal appeal for another case where that I was writing it a week and a half ago, and I've already taken that private letter ruling apart. I've dissected it, and I've converted it into a punching bag that I abuse the IRS with. When they say something stupid, you can take it and start whipping them in the face back and forth. And that's exactly what I've done. I'll give you a simple breakdown. Anyone who knows Bitcoin technology understands that there is contracts that Bitcoin can do smart contracts. What it lacks is an oracle and an if-then capacity. So Ethereum is actually superior in its smart contractability over Bitcoin, and as such was better. Now, if we go back to our definition of like kind exchange, I would say they're same in nature and character. They're different in quality and grade. All right. So they're getting into a very small distinction there. All right. In terms of things. Now, let me give you an example of other things that the IRS has approved for like-kind exchange. The IRS has approved the exchange of a FCC license for a radio station for an FCC license for a TV station. Clearly, two totally different media. Okay. They've also approved for like-kind exchange a baseball player contract for another baseball player. So you could exchange a catcher for a pitcher, right? A pitcher can pitch and a catcher can catch, but you wouldn't want to switch their jobs, all right? They are specially skilled and nuanced, all right? These are two these are intangibles that I'm giving you. I'm not even, there's approximately 1,400 court cases on like-kind exchange. You can drive a Mack truck through the loopholes in this law, which is part of the reason why they closed it. But with cryptocurrency, IRS has already said their property, has already said that they're virtual currencies, has already classified them as convertible virtual currencies, and within convertible virtual currencies, we have almost all cryptocurrencies. So there's a very significant level of classification that the IRS has already established, wherein a cryptocurrency is substantially different from my telephone. All right. I mean, but we're talking Bitcoin versus Ethereum. They're getting in some really thin things. And they basically say in this article that if Bitcoin doesn't have smart contracts, Ethereum does. Well, they're dead wrong, flat out right there. Secondly, they make the assertion that Bitcoin was an on and off ramp. Bitcoin and Ethereum were on and off ramps for crypto, which was predominantly, but was that a characteristic of the coin or a factor of the environment around them? And it's a factor of the environment around them because those are the two highest market cap coins. Any other coin was too small market cap. It could be easily manipulated. And so for a transfer of value or, between one exchange and another, people preferred like Bitcoin and Ethereum. They didn't feel they'd be used as easily. So that's not really a function of the coin. That's just a function of the marketplace around them. Has that changed? Yeah, it's changed a lot. All right. I look on Coin Market Cap right now. I could look on Litecoin, and there's approximately 20 different fiat currencies that you can buy Litecoin with. So the answer is no. That was a temporary situation, and to further put the nail in the head, I could buy Litecoin with US dollars on Coinbase in 2017. So the entire private letter ruling is fallacious. It is pathetic, and I could drive a Mack truck through it. In fact, what I really would do is I turn it into a punching bag. I could beat the IRS up on it. So here's what we do. And I've already got the legal arguments written. If anybody's going to get audited or gets an audit letter for 2017, the first thing we do is we appeal immediately. We appeal to the appeals office that the IRS does not have the right to open this audit up, even though they're claiming over 25% of income is unreported. Because they're going to claim they're not going to assume like-kind exchange. We're going to come back and say, no, you can't assume like-kind exchange doesn't work. You have to prove that before we're going to open up the audit. So, I can pretty much, we have some very strong legal cases we put together. I mean, this is about a 30-page legal argument along with the whole pro argument on why like-kind exchanges apply. And we've even got more articles. We can have more materials. By the time we're done, it's going to be about a 50-page legal article with law citations and facts that we're just going to beat up the IRS on it. And so I think I can protect most everybody, but not everybody in 2017. I do have let me tell you some other stories here. We just had a client got $120,000 refund. $120,000 refund for claiming like-kind exchange in 2017. We have another client just 2 weeks ago got $55,000 back claiming like-kind exchange 2017. I have another client who is about to receive $400,000 back claiming like-kind exchange. And I've saved I've actually helped people avoid taxes on $40 million in like-kind exchange. So we have success, we have the track records, and all the and this is the difference between an accountant and someone with a law background. An accountant basically reads it and says, this is how it applies to you, right? And that's what you got in the Forbes article. He's an accountant, he's a CPA. He goes, this is what the IRS says, you better watch out, right? Whereas a lawyer is going to look at it and say, oh yeah? Well, let's talk about that a little bit. Is that really what it means, right? And in crypto, that's what it's going to do. The IRS is poised, in my opinion, with this private letter ruling. I believe the only reason they came out with it because they were about to start a compliance campaign going after Kraken Poloniex non-filers in 17. That's the only reason they came out with. Where were they in 2018, 2019, when real tax professionals wanted guidance? They weren't anywhere, right? Now that they want to, basically fleece the public, now they came out with some that is totally self-serving.
Yeah. Well,
is that too emotional?
Yeah, no. I love it. I love it because it's a perspective that I haven't heard before, and I know there's a lot of people that would benefit from that could benefit from having that ability to claim the like-kind exchange. I mean, that's basically all of us. I'd say the majority of crypto people who hold and buy cryptocurrency generally have more than one crypto, usually, unless you're a maximalist or something like that. But and at some point you've exchanged it for some other crypto, just to do some discovery or curiosity, whatever. I think what I was going to ask was, I heard this and I wasn't able to confirm it before we got on the call here today, but I'd heard who was telling us that, Chill, that the IRS has doubled their staff and they're focused on going after people who did not claim anything about cryptocurrency capital gains, and also people who are taking advantage of the PPP loans over the pandemic and all of that. So that I don't know. Have you heard that, or is that news to you, Clinton?
Oh no, I've heard it. Hey, the IRS is on the verge of organizational collapse. I think the Taxpayer Advocate, which is an independent service, has pretty much said the same thing. They because of some shenanigans that the Obama administration and the IRS at the time engaged in to basically hunt the Patriot Tea Party groups, they got slammed by Congress, the Republican-led Congress, and their budgets have been pared back year after year after year after year. When Trump came in, he actually increased it a little bit, and now there are massive proposals to increase it. It's definitely a problem. They're very understaffed. They have not been able to rehire people for the last 5 years. Even by hiring a couple thousand more auditors, they still aren't even getting up to stuff. They're overwhelmed, they're overworked, they're underpaid. The IRS finished the tax season this past year with 35 million tax returns unprocessed. That from the previous tax year. 35 million. This is,
10% of the population, I think, or that's not even 10% of our population, including children. So it's actually higher.
It's over 20% of all tax returns that are filed for individuals. Yeah. So they are hiring a lot of people. They're particularly going after, like you said, the PPP loan enforcement. Okay, because there you're into real fraud. You're into criminal fraud.
Yeah, okay. That's a pretty open and shut. That's a lot easier than trying to figure out where somebody squirreled their crypto away, I would imagine.
Oh, you're definitely right about that. The IRS is struggling with how to do an effective audit, and we have, because I'm specialized on it, I've developed sophisticated defenses to intercept what the IRS is trying to do. Right now, the IRS hired a company called TaxBit, which used to do the sort of thing that CoinTracker used to do, but they were not as good at it. And that's why they went after the IRS contract. And they're going to try to do crypto gain calculations for the IRS on taxpayers. Now, anybody who's done that work before knows it's not pretty. A lot of manual work is involved, but they're not going to be doing the manual work. And they demand all recs. So when you get audited, they look at one particular year. Like, let's say right now we're doing a lot of 2018 because of Coinbase 1099s. they want, in order to do the crypto analysis, they want all tax records from the beginning of time for your cryptos. But the thing is, their audit only permits them to go after 1 year. So what we're doing is we're playing with the burden of proof and trying to frustrate that whole effort. Actually, we're circumventing it using burden of proof in legal arguments to frustrate the IRS's efforts, because they're just going to come up with a bad number, and then they're going to hit you with a bad number because TaxBit was not really the sharpest tax product out there. And then we're going to be arguing over this record and that record, and it'll be a pathetic experience. So we're avoiding it.
That's awesome. I am really disturbed that there's so much misinformation out there, and all these articles and stuff, and there's no real like the things that you just mentioned. That was like a lot of those things where I heard it for the first time, and I'm like super involved in the space, and it's kind of frustrating that there's no good source of information. So I would like you to talk about a little bit about the crypto audit, and how can we make our taxes bulletproof? Because I do not want to go through any audits personally.
Great. Hey, so cryptotaxaudit.com is a service. It's our website where we're trying to put together products that can help crypto traders protect themselves, and protection happens in a couple different ways. We can help you find out in advance when the IRS is going to audit you before they've even sent you a letter. We can show you how to prepare a crypto tax return using our bulletproof methodology. The same methodology we'd be charging, $2,500 to do. We show you how to do it. And the course is free once you're a member. It's a $35 a month membership. And then we also show you how to use online tax software, which is one of the IRS free file products to prepare your tax returns. It's totally free. And the reason I've put this together, and we have a lot of other courses we're rolling out there. We have one as an overview of the U.S. income tax system, which very few people understand how the whole income tax system works in the U.S. So this is like a series of videos. This is some night, instead of watching Netflix, you go over there and you watch. It'll probably take you about an hour and a half to go through. We'll talk about Wesley Snipes. We go into Donald Trump's tax return. We go into Hillary Clinton's tax return. We go into Joe Biden's tax return. We actually look at other people's tax returns. How many times you've ever seen someone else's tax return? Okay, never. You can graduate from high school and never even know what a tax return is. I mean, that's how underprepared we are from an educational system. Now, the software we show you how to use is OLT.com, onlinetaxes.com. TurboTax, Tax Act, and H&R Block do not want to do crypto tax returns. They support them as little as possible. The president of H&R Block came out and said, we don't want to do crypto tax returns. There's not enough guidance. Guidance for these guys means without the guidance, they have to make assumptions, and then that puts their 100% accuracy guarantee warranty in jeopardy. So they don't want that. So they just say, we don't want to do crypto returns. That's how they're protecting themselves. So think about that. TurboTax, Tax Act, and H&R Block. This is 45% of all individual tax returns are prepared by these three companies. And none of them are interested in doing what you need as a crypto tax provider. The forms that we would put in to make your return bulletproof, they don't even support them. They won't even tell you about them because they don't support them. You want to report a Ponzi scam, some sort of rug pull, they're not going to help you with that. All right. Now, when we get into accountant prepared tax returns, we have another crisis because the accounting profession in general is getting older. The tax profession is getting older. And with all the tax law changes in 2017, the stimulus, 2 years of stimulus, massive tax law changes that are going to occur this year. CPAs, the most knowledgeable group, are going to be completely busy taking care of businesses. That's where all the money is. It's in business, and they're completely booked. They have no time to help the individual and no time to learn about cryptocurrency. They're flat out. I did a webinar for the American Institute of CPAs. On there, I said 95% of CPAs want nothing to do with cryptocurrencies. They're waiting for the 1099 crypto to come out. And I was corrected afterwards. The other CPAs on the call said, no, Clinton, that's probably closer to 99% of CPAs want nothing to do with cryptocurrencies. So then that leaves a whole swath of tax preparers, which would fall into like the Liberty Tax, the H&R Block, store offices, your mom and pop tax preparers who are really clueless. They're undertrained, underskilled. And what I hear people calling up is everybody's telling me, I'm looking for somebody to help my taxes because my CPA is retiring or he's old, and and this is a recurring theme. In fact, the American Accounting Today came out with an article saying there's a lot of tax preparers that are retiring. So for crypto people, this next year is going to be a crisis in tax preparation. You're not going to be able to get somebody to prepare your tax return. How would you know if somebody's qualified at a CPA? Here's your first question. You ask them, how much cryptocurrency do you own? And if they don't own as much as you do, then you probably need to walk the other way. All right. Anybody can buy, $100 worth of ETH, but, actually having a lot of skin in the game and thinking about the issues as a tax professional, if they have a skin in the game by owning a lot, you should just go the other way. They don't really know anything. They listen to a webinar and now they're equipped. That's it. So the other thing we do with Crypto Tax Audit, which is the most important thing still, is we have revolutionary technology that actually nobody else in the tax preparation industry has. We can tell you in advance when you're going to get audited by the IRS. How do we do that? When you sign up for Crypto Tax Audit as a member, you sign an authorization form authorizing the IRS to talk to us. And we then run a program which polls your IRS transcript records, which is all the data that they keep about you. And we run this weekly, and we can see when they flag one of your tax returns for an audit. So the way they work is they have giant supercomputers, data mining, and compliance programs. When they decide they're going to audit someone, they flag them. And then it takes several months, on average 6 months, before a human gets assigned to do your tax return. All right. It's called a pipeline, right? It's about a 6-month pipeline before a human kicks in. So that gives you a chance to say, they're going to audit that tax return. I could go back and fix it if I didn't report the cryptos as well as I should have, or anything else. It's not just crypto related. It could be anything that the IRS would audit. You can fix it and amend the tax return before the audit begins and avoid the 20 to 40% accuracy penalty plus interest. So this is revolutionary. Plus, once we're representing you, we can help you for a very affordable price with, tax debt or calling the IRS or any sort of IRS problems you might have. So that's actually the driving benefit of Crypto Tax Audit. But there's nobody else doing this. And wouldn't you want to have a defense? I mean, otherwise you're just waiting for the IRS to drop a letter in your mailbox saying you're getting audited. You don't have to wait for the letter bomb to hit you. You can know in advance. If no general would go to war without having radar about finding out where the enemy is. And that's what you need, because we know this one thing, Sil. The IRS is coming after crypto people this year. They're going to come after them hard because they know they have money. Everybody else lost their jobs last year, except for the crypto people who were making a killing. So
no, it's something that ever since I've been in this space, I've just been wondering when is the IRS going to shake the crypto tree and see what falls out, because it's definitely, there's some money for them to be made there. I mean, there's a lot of people who haven't, just through a clear lack of guidance, haven't done maybe exactly what they should have, and so there's an opportunity for the IRS to go after people. And it sounds like what you're providing is kind of some early warning and then also crisis management. If I do get flagged for an audit and it's for a tax return from like 2016 though, I can't file anything at that point, right?
Well, let's say they catch you for 16. Well, yeah, at that point we can't amend. At this point, we cannot amend 16 and 17 for most people. But if we know what it is, then we can start to at least strategize what the defense is. Let's say they're going to come after you for 16 or 17. I can find out when I call up the IRS, I can find out what's caused the flag. They will disclose that to me. And if they say, well, there's some unreported income, from cryptocurrencies, something like that, or let's say you didn't file a K1 or something like that, we can get a hint of what they're looking at so that we can prepare a defense. If we find out they're coming after you with cryptos, then the answer is, well, let's look and make sure you would have qualified for like-kind exchange. Not everybody would. I had one guy who did like-kind exchange all the way through until December 28th, 2017. He panicked. He sold everything he had. A day later or 2 days later, he bought it all back. And so I said, you locked in all your gain. We can't do like-kind exchange for you because that year you harvest, everything went to fiat that year. Right. I had another guy who was, he had a massive amount of trades, 250,000. And he did them all on Coinbase. So, and Coinbase, you go to cash, you go crypto to cash, back and forth. You don't really go coin to coin. It's all back to cash. And that's what all his trades were. So he didn't realize that he would go from one coin to another, but he did it via cash. So he didn't qualify for like-kind exchange. So not everybody would qualify. If you cashed out, you got to be very frank about that. So,
gotcha.
But yeah, there are, I guess, if there's anything we can take away with it, is you don't have to, you're not a sitting duck for the IRS. All right. We can have defensive strategies. We can have aggressive, the best defense is good offense. We can have offensive strategies, and we can take a sense of where you're at and how to protect yourself. So, I really think the IRS figured out this past year that 2018 was a useless year to go audit because everybody lost money. I have one client, Coinbase said they had $3 million. We did the entire calculation. They lost 17,000, which means the IRS is going to have to give them a refund, and the auditor is arguing about this. Yeah. So yeah, it's a real. I think they realized it. Yeah.
I'm sure there's a ton of crazy stories. I'm sure you've heard about everything. One question that I had, and Chill, hop in here if you need to or want to, but so Coinbase just gives my tax information to the IRS if I'm over a certain amount. Is that accurate? Currently,
it is if you did over $20,000 in proceeds or 200 trades.
200 trades or over $20,000 in proceeds.
Proceeds would be if I sold $20,000 worth of stuff. All right. I'm not talking profit. I'm just talking proceeds.
Okay, proceeds. So in those two instances, the IRS already knows what you did on Coinbase. And do you know? And this is getting kind of out there, but there's these like blockchain and analysis companies that like Coinbase uses to make sure Bitcoin from North Korea or something isn't being laundered through the exchange. Does the IRS, to your knowledge, have a similar capability to like track your cryptocurrency during the audit process, or is it mostly just information that they've gotten from the exchange or that you've had to turn over yourself?
Well, that is a good question. What does the IRS know, and what can they find out more if they work at it? Okay, so what do they learn from Coinbase? Or let's back it up a little bit. When a 1099 is issued, all they're getting is a 1099. This 1099 says Coinbase, got Matt here, and he made, it's the sum of all your sales. That's the number that they report. So let's say you had $10,000 of Bitcoin. You take the 10,000, you sell it, and you buy, you sell it for 10,000, and you buy Ethereum, and you sell that Ethereum for 10,000, and you buy Litecoin, and you buy XRP. You do it 5 times. Well, since the proceeds each time was $10,000, that number would show up for you as 50,000. Okay, so did you ever have 50,000? Never. All right, never had more than 10,000. All right, so the more high frequency, or the more you reuse each dollar, if you will, the higher that proceed number becomes. It's very misleading. Okay, so I have one client, he has a proceeds number that's way up in the tens of millions. So, that's very misleading. In fact, he lost money. So the IRS has proposed in the Biden, budget, funding to change the 1099-K to not just have proceeds, but also to have your total expenditures. So it would include the cost number. All right. So in this scenario, in that scenario I just put out there, you would have had 50,000 in proceeds, but you would have had 50,000 in cost. And the difference between those two isn't always the perfect answer to profit, but it gives us an indication that you weren't making any money. All right. So that's a change, and I would expect that to come into place not this year, but for 2022, we'll see that happen. A second big change they're going to do is a 1099 interest form, 1099 int, which usually who gets bank interest anymore? Nobody. But now they're going to add the total inflows and the total outflows to each one of your bank accounts is going to be added in there. So all the IRS is getting picture, and that'll happen next year too. All they're getting is the total, the aggregate. They're not getting the line item details, okay? So in order to get that, they have to get that detail. They ask you during an audit to provide it. They will also file a summons on Coinbase to turn it over. But for some reason, I haven't actually seen what that data coming back from Coinbase looks like, but it is not making my auditors satisfied. Then in terms of chain analysis products like chain analysis, and there's a couple of them. The IRS does use those, but they only use those in criminal cases. Okay, when they're going after dirty coins, dirty money. When we look at capital gains, the way the capital gains laws are written, when we pair up the sell with, when I decide, okay, I sold this coin, when did I buy it? I actually have some latitude to determine when that is. So, and as a result, following the blockchain is not really a productive approach in a civil audit of a taxpayer.
Gotcha.
So that really doesn't help.
Gotcha. Good. Oh, interesting. I really wondered about that. That answered my question. Thank you. Chill, you had a couple questions?
Yeah, I have 2 questions actually, and then that's all I have. One, basically, what do you suggest to recommend to those crypto kids who haven't filed in 2017 or 2018? Then they learned about the tax, and now they kind of want to get things right, because we know the numbers are like, it's a very small percentage of people who actually filed for those years. That's my first question, and I would like you to leave us with the thought, like you mentioned earlier, there's a crisis, almost in my mind, it's a crisis that's brewing, because we talk to a lot of crypto tax CPAs, and then most of them, they don't even want to deal with crypto. The ones who do, they just want to deal with people who had maybe 10 trades or something minimal, and nobody wants to touch DeFi clients. I mean, that's because they cannot guarantee accuracy. It's very hard. It's like a lot of pressure on them. So I would like to hear your thoughts on how do you see this space evolving, and if you see any solutions to that, because I know you're pioneering everything here.
I am actually. It's scary. You look behind you and like all the competition is, several blocks back. Hey, so you asked me 2 great questions. One is a real practical question: how do I get compliant if I haven't been that way in the past? And secondly, the challenge of DeFi. And DeFi is very important because it just broke on the scenes last tax year, or this current, last year, and not everybody got into it. Many more people are getting into it. It presents unique problems. In terms of getting compliant, it really breaks my heart, because depends on how you look at the statistics, but the suggestion is that 30 to 50% of all millennials, people under 40 at this point, owned cryptocurrencies. Most of them never reported them on their tax returns. And what's happened, they didn't know how to, they may not have known that they had to report them. Their tax person they worked with, or the tax software they worked with, didn't ask them any questions. And so they didn't report it. And they didn't report it 1 year. And then the next year turns around, then all of a sudden they realize, wow, maybe I should have reported this. But they still don't know how to do it. And the 3rd year rolls around, it's like, I don't know if I should report it because I didn't do it in the previous years. And if I report it now, the IRS is going to go look back. I mean, the fear just mushrooms, right? That's very big. And I'm heartbroken, because what we're seeing is a whole generation of Americans are sliding into tax evasion. They're sliding into a felony level tax evasion, and not because it was something they ever intended to do, but because there was no one to help them, the IRS left people out there, and they couldn't dig their hole, get out of that hole. So here's my strategy for you. If you haven't prepared your tax return for 2020, you should do it and report everything. If you've already filed your tax return, you should get some help and amend that tax return to report all your cryptocurrency gains for this year. All right. As far as the previous years go, the challenge people have is if they went back and reported their gains and losses for prior years, they may not have the money to pay for it. It would send them back into debt, and they probably got student loans. So that's not something they want to do. So, statistically, a very few people are audited. Cryptocurrency people are certainly going to be higher percentage, but that's where a strategy of using crypto tax audit to kind of watch your back on the past years, like 18 and 19, until they roll off into the statute of limitations protection. Most people, 18 was a losing year, a big losing year. 19, some people gained, most people lost. So, you don't have a lot. So your likelihood of the IRS opening that up for a 6-year statute of limitations because you underreported 25% of your income is probably low. All right. So you really just have to focus on the 3 years. So with crypto tax audit, tutorial membership, transcript membership, you can watch your back, but make this your first year, 2020, your tax return you filed for the 2020 tax year, make this completely correct. And then next year, make that correct. And that next year, make that correct. And then everything else is rolled off, statute of limitations, and you can sleep again at night. Okay, so that's a strategy to moving into compliance. Now, and crypto tax audit, we have the course down there. We have the free tax software, and what a lot of people want is like a second pair of eyes. They're not comfortable doing it themselves, and so we have a service where you can subscribe. You can call up for a half-hour call with one of our tax professionals, and they're super friendly, super helpful. They'll review your tax return and let you know how it meets up to our crypto reporting standards. You can't get that anywhere. All right, so this is a tremendous. And if you had some people call back twice because they just want extra help. So we're trying to bring as much value to as many people as possible that help you sleep at night. Now, DeFi, massive problem. If you're investing in DeFi, or if you haven't started yet, I just want to let you know it will be very complicated to do your taxes. When you trade on Kraken, Coinbase, Bittrex, these are centralized exchanges, and they're tracking the trade records. They record what you bought, what you sold. You can download it. It's beautiful. All right. But with DeFi, there is no central record keeping explaining I traded this for that. Instead, it's written on the blockchain. Each protocol writes on the blockchain in their own manner. All right. So there's no standardization on the blockchain in terms of how transactions are written. And you would like to think that, oh, hey, I was using the Aave, protocol with Compound, and they're going to write it in a certain way, but they might pay out their coins not from the same wallet that you sent them to. They might use a central pooled wallet to send back coins to you. So you have different difficulty connecting it. Going back and connecting the smart contract records isn't always consistent. And the way you're not always sure what's happening inside a particular smart contract. It doesn't say, hey, I'm smart contract, Aave number 1. It doesn't really jump out in a standard format. So, because everything is, you're looking at a lot of original created contracts. So it's super, super difficult to go back and match it. Now, having said that, you go to a service, a crypto gain calculation service, and we use a Cointing inside our company, and it's a great product. There's others that are as good as that product, but that's what we use. But if you were to plug it into a Cointing, and they all do the same thing, they want to break your trades up into a sequence of short-term capital gains events, and this is exactly how trading happens in DeFi. Let's look at an example. Let's say I take some coins, I take some ETH, and I lock it up. Well, actually, I don't want to get into trouble here. I do know this example. A guy had Chainlink, and he staked it. And when he staked it, he has an expectation of getting his chain link back, right? So he's not selling it, all right? But when he stakes it, he gets another coin called an A-Link, all right? A-Link is custom minted for what he staked in that liquidity pool. Now, then he can use that A-Link and he can trade it, he can move it to a lot of different places, but eventually he brings that A-Link back to get his coins. You don't want to give up your holding period for your ETH. All right. I bought it 6 months ago. I staked it for 6 months. I've now owned it for over a year. Should I sell that ETH? I want long-term capital gains rates because I never gave it up, even though I staked it for part of that time. But that's not how these capital gain calculation services will work. They'll say, you took the ETH, or the link, and you traded it for an A-Link. They keep the price. And then that A-Link, you did this and that with it. Eventually you brought A-Link back, and then now at a higher price, and you traded it for that original ETH, and that's another trade. And so they're going to show your holding period for that ETH as being, today when you got it, not a year ago when you first bought it. So this is going to generate all sorts of high tax results. You're going to have higher taxes because it's going to show a short-term capital gain when it should be a long-term capital gain. And a whole slew of other problems are spinning out. That's just one of several massive problems that we have. Basically, there are 170,000 classifications of transactions just on the on Ethereum chain, right? But now we start to move into trading on the Flare network, on Polkadot, on some of these other networks. It's just multiplying. We're going to be moving towards 1 million different types of transactions. Each protocol has its own set of transactions. There's no standardization. It's extremely problematic. You're going to have to do a lot of manual work if you're doing DeFi gain calculation, or you're paying a lot of money, in the thousands to get it done right for you. So, word for the wise on that.
Gotcha. So a couple questions from the chat here, and then I think we're going to wrap it up. But so one of them was, what are the benefits of moving to Puerto Rico?
Puerto Rico. Okay, so the value proposition for Puerto Rico is this. Puerto Rico is a territory of the United States. It's not a state, but so people there are U.S. citizens because of the principle of in the U.S. that no taxation without representation. Puerto Rico collects all the federal tax for its citizens. So people in Puerto Rico do not report their Puerto Rican income on a U.S. tax return to the IRS. Okay. So as a result, they have significant control. They put together an incentive program to attract people to Puerto Rico. Act 20 and Act 22 are what they're commonly called. But in nutshell, large crypto traders are going there because your capital gains on your sale of your investments is 0%. Whether they're short or long term, they're 0%. That's the value proposition. We need to break that down a little bit. It's very complicated, but it's not 0% in completely. So for example, I buy Bitcoin at $6,000. And today, Bitcoin is worth 30
or something.
Let's say it's worth, make it easy for me. Let's say it's 40,000, right? Okay. Pretend it's 40,000 today. So, and today I moved, let's say tomorrow it's 40,000. There you go. And then tomorrow I go down to Puerto Rico. So and then when I'm in Puerto Rico, the price goes up, and the next January it's now 100,000. All right. What happens tax-wise? The gain from 6,000 to 40,000 occurred while I was in the U.S. So I still have to report. So the year later, when I actually sell it, I have to report to the U.S. and to Puerto Rico. I report to the U.S. the gain from 6 to 40,000, right? So a $34,000 gain, taxed at regular tax rates, probably long term. And then the gain from 40,000 to 100,000, that's $60,000 gain. I report to Puerto Rico, and the tax is 0. Right. So that's the nutshell. That's the excitement about it. So if you wait till you're rich, if everything's hit the peak and you go there, well, you're not going to benefit. You have to go there before you hit the moon.
You want to be living there while things are appreciating, and you haven't, basically.
Yes. Yes. Now, having said that, there are significant. All you have to be there is 6 months, 183 days. You can apply and get the special tax incentive status in Puerto Rico. But there are significant residency rules in Puerto Rico and according to the US law that you have to maintain. If you fail to keep these, and they are a little bit complex and convoluted, and if you don't keep them, the IRS can pull the Puerto Rican tax benefit from you and then tax you on all that stuff you hadn't paid taxes on in prior years, which could be painful.
Right.
So in a nutshell, for most people, you should anticipate going there for multiple years. You should anticipate being there at least half the year, and you cannot be in the United States more than 90 days in a year. You could be anywhere else, but you just can't be back in the US.
Gotcha.
And so as a result, plus there's a significant costs. There's a $5,000 application fee. You have to give $10,000 of charitable donations each year. You're gonna have to pay for lawyers and accountants to support you. So you're looking at $5,000 to $7,000, maybe more in those sorts of fees. So because you're looking at a $25,000 just out of pocket for the privilege of being there, plus the real estate's gotten significantly expensive, you should not really entertain a Puerto Rican option unless you're sitting on $1 million.
Gotcha. Great. No, that's I kind of wondered about that a little bit. I probably wasn't really considering it, but I know there are a few people out there watching that definitely are. Okay, so the last one here is so stable coins. So if I'm on Coinbase, they've got USDC, and obviously they have US dollar, and I can flip back and forth between those two. That is not a taxable event because it's $1 to $1, right? There's no gain that I'm realizing there. If I'm using like the like kind exchange, and I've gone from a stable coin to a crypto, is that still crypto to crypto, or is that like US dollar to, is that like fiat to crypto? Does that make sense?
It would still be, for like kind exchange, stablecoin is still a cryptocurrency.
Okay.
I mean, in my definition, what makes a cryptocurrency, this does flow out of IRS writings, but it's basically it's a store of value on a distributed and using encryption on a distributed ledger technology, where each coin is basically uses a protocol or code to implement what it does differently on its particular distributed ledger. So
Right.
The only difference between one coin and another is the code, all right, the Unicode that supports the access to the distributed ledger. And these all gives you hints about why it is like kind exchange. Now, US dollar is totally separate. It's a physical piece of paper, and it's serialized. So it's a very different operation. Plus, it's called currency. It's not an asset. So stablecoins are they're, yes, you can have a gain or loss in stablecoins, but it's infinitesimal. It's nothing to really even bother reporting.
Right. Gotcha. Okay, well, I think that's gonna do it. Chill, did you have any parting thoughts there? And then Clinton, we'll give you a few minutes here at the end, and we'll plug our stuff and wrap it up. But yeah, Chill, I'm gonna throw it over to you.
Yeah, no, I'm just super grateful, Clinton, for you doing all this, because it was super helpful. There was one more question, Matt, that I'm seeing here. So this like kind exchange 1031 only works for previous years and 2017, but 2018 and going forward, you can't use like kind exchange, true?
That's correct. Yeah, the law was changed at the end of 17, going into 18. It's only for real estate, but we still feel it's, we save people a lot of money while they could amend their tax returns, and we can protect. I'm expecting an avalanche of people wanting to be protected from the IRS. So please contact us on Crypto Tax Audit, and we have blog sites out there where we're putting all our very attractive articles. We have an article at Donnelly Tax Law website on Puerto Rico. But really, I invite everyone to follow us on Twitter at Crypto Tax Fixer. That's my ID there, Crypto Tax Fixer. And we put out a lot of our articles. That's usually the first place we announce it. And and I invite everybody really to become members of Crypto Tax Audit to protect yourself. There's no other, avenue, and all our products and our creative stuff is going to be coming out in the Crypto Tax Audit space to just become a massive resource for everyone. So we'll be talking about like-kind exchange. We'll be talking about the new Spark token, how to treat that as a gift from a foreign company, and a lot of exciting things there. Wash sale rule. We have an article we just came out recently about, does the wash sale rule apply to cryptocurrencies? Short answer is no, but it's interesting to read because it explains how you read tax law. So I invite everyone to come and join us and sign up and stay in touch, stay informed.
Awesome. Yeah. Yep. Please do. And then let them know we sent you here at the OPI, and we're looking forward to whatever kind of comes next for your crypto tax audit and then what you're doing there. I mean, yeah, like Chill said, you got a lot of great products that are coming out. I think they're very useful for people in the crypto space, especially if you haven't, if you just don't know about taxes, don't understand them, have gotten behind on them, definitely, start getting your ducks in a row, because I think it's gonna, they're ramping up the enforcement. There's some pain coming, unfortunately. So we just want to keep everyone informed. Last plug here for what Chill and I are doing. I mean, we've got the OPI. Please stay tuned, subscribe. We've got ourselves on Twitter and all that good stuff. And if you need any one-on-one crypto consulting help, we've been doing a lot of incubating and pushing people's ideas forward. We've got a good team of developers, a good team of lawyers, securities people, just a great network of crypto-focused people like Clinton, helping out on the tax side of things. So yeah, reach out to us, hello@willandreimer.com. I'll put it here in the chat, and I'll link your socials, Clinton. I think we plugged your website there as well. So yeah, if you're watching this on the restream, thanks for tuning in, and just look at the chat there for all the different links. They'll be in the description. And yeah, stay tuned. We'll be bringing you some good content here coming up in the next few weeks. And appreciate everybody tuning in. I think that's going to do it. So have a good rest of the day, Clinton and Chill, and thank you for your time.
Thank you. I'm super grateful to have you. You're my tech
Thank you so much.
Right on. Okay, guys. See you next time.
Bye-bye. I lost your audio.